Good morning, legends. How are we all feeling? Welcome to the beginning of a new trading week. This week is going to be super difficult. Last night was a hint of what's to come, so I'm going to get into that. There are so many news plays that we need to be aware of, and we're going to talk about some potential outcomes for this week. Before we get into it, big shout out to everyone in the Discord. Another sleepless night for you guys. I see the Discord live trade room was running hot last night. I tell you, we're getting to the point where we need a guest list for our live trade room. It is the hottest place to be in Melbourne, it seems. Massive shout out to everyone who has just joined the Discord in the last couple of days. The beginning of the month is the best time to join if you're thinking about it, because the memberships are processed through Patreon, and Patreon charges you at the time you join and then again on the first of every month thereafter. So joining in the first week of the month will help you get the most value out of your membership. So if you've been thinking about it, make sure you check the description of this video for the link. And whilst you're there, there's other links in there that can give you discounts on things. My preferred exchange, of course, OKX, also Binance. There's discounts for other websites as well that I use, such as TradingLight and HighBlock. So be sure to check that out if there's anything in there that you need. Now, let's talk about the markets at a macro level so far. Up here on the right side is Bitcoin. Once again, when we're talking about the daily, there's not a lot to talk about every day. We identified the M formation on this channel. We expected this drop. We got it. We are now potentially in the level 3 drop of the daily time frame. This was level 1 here. This was level 2. Usually level 3 tapers out into a sideways consolidation. So on the daily, you can see here that for the last few days, we really haven't gone anywhere. Now, on a lower time frame, there's been massive volatility. But when you zoom out, we're really just going sideways. And so far, that sideways is really trying to fight this bottom trend line to stay above. Is this going to be the week that shifts us out of the zone, or is it going to be the week that finally breaks that channel? This down here is the weekly trend line as well. So if we do break down, we still have a bottom level of about 35,000 to break before, we should assume that we're going much lower than that. Moving on to Ethereum. Ethereum is also holding this channel really well. It does look like in this current candle that it has a lot more strength than Bitcoin has. As I'm filming this, we do have 38 minutes before the daily candle close. So this is looking like a pretty bullish candle to close on the daily. However, on a higher time frame, we've not yet changed this market structure. Dixie down here looks like after having a bit of a run, it's now just consolidating a little bit. Is it consolidating for the next run, or is it consolidating for a big pullback? I think that's going to depend very much on the FOMC announcement this week. So that's definitely one to keep an eye on. As traders, we all really want it to pull back, because if it does pull back, then that's going to allow things like Bitcoin and NASDAQ and things like that to rally. Gold down here has broken the support line of the descending triangle. So if we get a retest of that, we could expect further continuation down. That's not the greatest sign. That means that people are risk off at the moment, which kind of makes sense. Around this time, when we're only a day or two away from something like an FOMC meeting, most people do just sit on their hands. And NASDAQ also looks like it's just ranging sideways as well, which does line up with what Bitcoin is doing. Okay, so moral of the story is on a higher time frame, we're really not doing much. Let's go down and have a look at the lower time frames for Bitcoin. Okay, so zooming in on Bitcoin, this is the daily channel we were talking about that is still currently holding, and this line here is the weekly and monthly trend line channel. We are a little over 24 hours away from the FOMC meeting announcement, and that usually brings really high volatility. It's very difficult to trade, and to be honest, unless you've been trading it for a long time, it's probably not worth it. The better move will be to try and trade the recovery after the FOMC meeting, but every time I tell you guys to be conservative, no one listens to me anyway, so I'm sure the live trade room is going to be going off when this comes out. It is going to be 4 a.m. in Melbourne when that happens, so good luck to you guys. I'll be in bed. Now, down here, what we can see more clearly now is the M formation at the top of that channel that led to this drop and this drop as well, and now we're tapering off. What has confused me about this drop is whether we had level 1 and 2 within the same drop and that this one was 3. Until we actually change market structure, we can't know that, and so far we haven't. We're just ranging sideways. The fact that we're ranging sideways highs tells me that this is the consolidation after a level 3 drop, but what can throw out the model is a news play. So very, very cautious right now. Just have a look at these last 3 weeks on the daily alone. Like, they are basically dojis. Price has gone nowhere for 3 days on a higher time frame. That makes it very, very difficult to trade even lower time frames. Moving down to 4 hour, and this is a perfect example. You can see here we had a bit of a rally, a full reset, bit of a rally, a full reset, bit of a rally, a full reset, bit of a rally. But each time we have these rallies, the push is losing strength. So you can see here how big this rally was compared to the final one, which basically was nothing. This candle formation here, these 3 candles, the bullish candle, the white one that's filled in, the red one followed by the white one, that's a reversal pattern. However, from there, price has gone nowhere. Currently, the market maker is holding this range, and you have to wonder why. On a 4-hour time frame, I would consider this area here to be the drop level 1, this here to be drop level 2, and this here to be drop level 3. Then you can see from there, we had a W formation here, and this right here is the breakout of the W and the retest. It's very, very clear on the 4-hour time frame what's attempting to happen here. Let's go and have a look at the 1 hour and see if we can see it even more clearly. Yeah, so here is the perfect example. This is the W formation on the 1 hour time frame, and this wick here wicked just below that daily bear flag trend line. The goal of this right here was to induce people to take short positions, because retail had convinced themselves that if we break that bear flag, we're going to 20k. The amount of short positions that would have been opened here would have been exponential. So the market maker gave you that little bit of false hope and then shot price right back up into the range. Now everybody who shorted this break right here is now trapped. Price shot out up from there. We went into consolidation. This period here, this consolidation period here, where the market maker is giving you time to get frustrated and impatient and also hopeful. So those who open short positions during this consolidation would be convincing themselves that they were right and that they just need to hold on. Price will come back. At very worst, you'll be able to get out at break even, but it's probably just going to turn around. It looks really weak. Also, more short positions would get opened up here because people see wicks here and a wick here, and they think that this is weakness. So more short positions get opened up, and then bang, they do a very sharp shift out of the zone, destroy everyone down here who were on 100x, 50x. They're all liquidated now. 100x traders, 50x traders here as well, liquidated now. 25x may still be safe at this point in time. Then they reverse price, and these people again start thinking, I'm a genius, I was right, I just have to be patient. They come down to this level, but they don't get close to the last low. They're still trapped, but they've convinced themselves it's going to come back to break even. It comes back close enough, but not all the way. These people remain trapped, and bang, we shift right out of the zone. That is the typical market maker method, reversal pattern. And now where are we? This part here, even though it's highly volatile, what we're dealing with here is potentially the retest of the W. The problem that we have with it at the same time is that this EMA is the 200 EMA on the 1 hour time frame, and now we've had all of these attempts at that zone and this attempt at that zone as well. So the question to ask yourself is, was price pushed up here just above this EMA to entice EMA traders or even breakout traders to take long positions? Because this here at the time was the high of the day. So the market makers trapped longs here and then brought price back down. This candle right here, this massive volatility that you see, this was a news play. Having a look at Forex Factory, this was here, the JOLTS job openings. That was the result of that. And if you actually have a look at it on lower time frames, that's it there. Look how volatile that candle was. That is what you're expecting during the FOMC as well. It is very difficult to trade. For example, if you took a short position here because you thought this was an M, even though you were technically correct that it was an M, if you had your stop loss just above these wicks, you would have got stopped out and then your trade actually played out. You might be thinking the same now here, that we have an M formation here. This is a better M formation in my opinion because it's not the result of a news play, and you could potentially get a really good day trade out of it before the next news play, which let's go back and have a look. Down here, we're looking at this non-farm employment change. This is going to be at 10:15 p.m. tonight, Melbourne time. So you just need to convert that for yourself, which is not that difficult. You can just go up here to the times, click on that, and then change this to your time zone, and it will become relevant for you. However, this here is on my 10:15 p.m. tonight, and then tomorrow morning for us is the FOMC statement, the federal funds rate, the FOMC press conference. So yeah, going to be very tricky to trade, but maybe based off what came out last night in this job openings, people are now feeling bearish on what might come out tonight. And that may explain why we currently have an M formation. Bear in mind, I'm on the 15-minute time frame. So this would only be a scalp trade. However, when you zoom out and take into account the higher time frame, it could also just be the retest of the W. So it really depends on how you personally trade. If you're trading smaller time frames, there is a short position off the M. We're probably a bit late, really wanted to get in off that candle. If you're trading higher time frames, which is probably the smarter way to do it, to be honest with you, because those wicks both sides, whilst this wick here would have stopped out people who actually were correct in taking short positions here, this wick here also stopped out everybody who was long up here. So I don't know, I'm just not a fan of trading when I know the games that are going on. So be very careful of the US session tonight, in my opinion. It'll be the UK close into US Open, somewhere around there. Now, speaking of which, if you are confused about the session times, I do have a free gift for you. If you go into your indicators and just write in the word session, have a look for this one, Market Maker Session Times by Trade Travel Chill. You can add that to your chart regardless of the time zone that you're in. There is nothing that you need to change. That's going to automatically bring up the correct sessions according to the New York time zone. But down here, you can still have this set to your time zone, wherever you are. And this is still going to stay correct. So the green is the Asian session, the yellow is UK session, the red is US session, and then this gray area is the dead zone, which is what we're in right now as I'm filming this. And this might make it a little bit easier for you to know what's going on. So being in the dead zone right now, all I'm really looking for short term is for the new high and the low of the day to be set. So I'm expecting that the high of the day is probably going to stay around this range. It's probably already set. The reason for that is so many wicks here and so many wicks here. There's a reason that the market maker isn't letting price break beyond here. There must be too much money trapped up here. And there's something that the market maker needs to collect before they can let price move up. So that tells me we're probably going to come down a little bit more to encourage more shorts, to give the market maker more liquidity. So need to see if this level here at around 39,000 holds as the high of the day today. And then the low of the day, would be expected to come back to around here. Now it definitely could break lower, could come back down to here. Need to wait and see. The other thing is that the Asia session is closed for the next, I think, 2 days. So when we usually see the Asia session set the high and the low of the day, not really sure what's going to happen when the Asia session is actually closed. What we can see happened yesterday is that because that was the only trading for Asia and UK was actually on a bank holiday yesterday, that the slow trend shifted into the Asian session. So usually we see a slow trend in the UK session, but yesterday we got the slow trend in the Asian session. Now here's what I don't understand. I really want you to answer me in the comments and just let me know what your brain thinks, because my brain tells me that if I see a slow trend, say I see that hammer and I decide to open a position after the hammer, and I can ride this trade up, let's be generous with that entry by the way, and I can ride this trade up here to the high of the day when that forms, and I can get myself a 4.5 to 1 risk reward trade there. My brain doesn't understand why I would stay up to try and short this instead, because I see the 3 hits to the high, the stop hunt, and let's just say I tried to short this all the way back down and I have my stop loss above the wick, but it's the US session and I get stopped out. Why would you choose this trade over this trade? Please tell me in the comments. I really need to know why people don't trade the slow trend and choose to trade the high volatility, high risk trades instead. I really have to know, because at the end of the day, even if you got your stop loss right, the best you got was down here. And also all these wicks here, that's heart attack material throughout your trade. Whereas this is like chill vibes. chill vibes, sitting on a hammock in Bali at the W, beautiful music in the background, you know, no worries. Alert goes off, target reach, take my profit. This is like car crash, up, down, sideways, what's happening? Did I get it right? Should I open a long? Like, somebody please explain it to me. Anyway, rant over for the video. So moving on from that, by the way, if you're enjoying this content, please hit that like button, hit the subscribe as well, turn the bell to all so that you can be notified every time I upload a new video. I do market updates 3 days a week, and then emergency updates when we need them, or other things that will help you in the cryptocurrency space. And I try to remain as unbiased as possible. Don't do 100K moonshot calls. Don't do 20K run away from Bitcoin calls. I just trade what I see. So if you like good, honest TA, then this is the channel for you. Be sure to like, subscribe, and leave me a comment below. And also just a massive thank you to everyone who has done that. A day ago, I was on 5,900 subscribers, and overnight I've cracked over the 6,000. So I'm so grateful to everyone who does subscribe to this content. And just a massive thank you to all of you out there for your loyalty. You have no idea how, when I see this, it justifies to me personally that I made the right decision going full time into YouTube and my own trading community. And whilst I'm here, just also a huge, massive thank you to one of our members in the Discord, the Alphas Warmer. You are the first person that ever sent me a super like on this channel, and I'm so grateful to you. That is the nicest thing that you could have done to show that appreciation for the free content. Just means the world to me. So big shout out to you. I know I give you a hard time in the channel about your charts and just tell you to use the delete button, but I think you're amazing, and just, yeah, big gratitude to you. Now, okay, that mushy moment is over. Let's go back to the charts. What I want to look at now is TradingLight. Let's have a look at the heat maps and have a look where the buys and sells are currently. It may give us a hint. Before we get there though, the thing to be careful of is that looking at the heat maps during the dead gap zone can sometimes be a false move. So I'm going to mark them out regardless as areas to watch. If you are interested in getting TradingLight for yourself, there is a link down below, and there's also a link to High Block, which we'll get to in a second. Now, moving this in nice and big, I know it looks super confusing. I want to look for any large significant orders sitting there currently. Now we have a lot of 500s above price. 500s is where I start to pay attention, but it's not huge. It's just a pullback to me. What stands out to me massively is this 974 up here. That's sitting at about 39,500. So what that tells me is that it's very possible we're in the W that I mentioned earlier. We're going to mark this level out on a chart, but I want to try and find it exactly in here where that highest level is. So we're looking at around 39,500. So it's a flat number here, and there's also 39,480 here, and there's a couple below, but we're going to go with this. So 39,500 is where the largest short positions are currently in the order book. And this is for Binance alone, by the way, which I don't really need to worry about other exchanges. Even though I leverage trade on OKX, I look at the heat map on Binance because Binance has the largest volume on any exchange. So if the orders are coming in here, it's going to bring down Bitcoin on any exchange. The only thing with this website is it's so sensitive. Now, above that level, we also have this. It's unlikely, if this 986 stays here, it's unlikely that we're going to head up to this one. But you have to remember these are limit orders and they can get pulled at any time. So the next level that people are patiently waiting to short is sitting at around 40,000 even. And then when we look below price currently, I mean, when you just look in comparison, like even if you don't know how to read heat maps, you just look at all the red up here, red and pink shows you high levels of short orders trying to bring price down, and then compare that to the red below price. There's really not much that's trying to hold it up right now. So it does make sense to me that we're probably going to try to shift out here, maybe create a new high of the day. Maybe we will eat through these orders here. Maybe last night's drop gave the market maker the liquidity that they didn't have here when they were holding price in the range, and now they can shift price out and upwards, encourage more long positions. Maybe they're trying to encourage longs before the FOMC. Who knows? High block is going to give us that data, so we will have a look at that in a second. But to me, when I see these orders, it makes sense to me that we're probably going to try and shift out here at some point today and head down. Or if we come down here first, it's just going to be a retracement, not a full reversal. And from there, we may bounce out. So when you look at that on the chart, that would mean that this here, the 15-minute M pattern, is only leading to a retracement. That's what I mentioned earlier. It won't be the big move. This here is the 1 hour W. This here is the whole retracement and retest of that W. And that may take us up to the 39,500 if the market maker decides to do so. Let's see if this drop here gave them more liquidity to be able to do it. So over to high block for that. And just a note, the link in the description of this video for high block gets you a 15% discount if you are wanting to get a subscription for yourself. It's worth it because high block isn't cheap, especially if you're in Australia and you do the conversion. It's really not that cheap, so take the discount. But looking at this, look how white it is. If you've been watching my past videos, then you will know that all of this white here is not normal, even here. And this is just showing us that these areas are all where previous positions that were opened have been liquidated and taken out both ways. So we've got all these long positions here were taken out when price went up here. More long positions were opened through here, and these ones so far have been taken out, but we do have this pink one down here. These are the 25x longs at 37,600 that are still currently safe. All of this white zone here is everybody who opens shorts down here. See how retail opens shorts when the market is already dropping? So a lot of short positions were open on that huge candle down here. It's hard to see, but there's a big cluster of greens there, and the greens are 50 and 100x short. This just screams retail. 100x at the bottom of a falling knife. Price only needs to move $40 for you to get liquidated. It doesn't make sense. High leverage is just such a trap. These people up here were the 50x traders that went short. A bit of a better position. They went short at the top of this range, but price has come back up and it's taken them out too. So really, the market maker is just collecting liquidity both ways right now. The delta is to the shorts. So we've got 7 billion, not enough for a big market shift. We could be coming down now to encourage more shorts. So that could be why we are seeing this M formation. But again, if this market structure doesn't change, so if we don't come lower than this, then I'm going to consider this to be a W retest. What's going to invalidate that it's a W retest would have to be only that price breaks lower, and then it has to break lower than this. So if you took the M formation trade, your targets are going to initially be here. And if we break that here, and if we break that, the W is not confirmed and you can hold on to it. But I personally wouldn't be trying to short it where we are now, because when you see that the highest orders, the 900 trade is up here at 39,500, anything coming down is a pullback before a shift higher. If those orders get removed, then that changes. And again, just to reiterate, I am filming this in the dead gap zone, and during the dead gap zone, sometimes those orders are put there just to hold a range and consolidation. So you'll get a lot of sells at the high of the day, a lot of buys at the low of the day, and that keeps the price contained between two levels until the UK session or the US session, when the market maker will then decide to shift it out. So it really is better to have a look at heat maps and liquidation data after the Asian session. But so far, this is what we have to look at. So we've got these two levels here, the 39,500s where we saw those really big orders in TradingLight, and then 40,000 up here was the level after that. What I personally think is going on is that we have here a classic buy the rumor, sell the news. I think people are expecting the FOMC announcement to not be great news because we have one or two things. They're either going to announce a recession. If they announce a recession, then the markets will rally. But then you have to ask yourself, do they want the markets to rally? And the answer is basically no. Went through this I did a live on Sunday. If you didn't watch it, check it out. But in my opinion, I don't think they want the markets to rally. So therefore, they're going to hide it. Then They're going to act like everything's all good. We're on top of it. No problems here. Nothing to see. Let's move along. And if they do that, then we're going to lose confidence in the market and we're going to just come smashing right back down. So it's possible that that's what people are expecting, is for them to hide it. And so we're having this push up now. We've got the W formation. This is the pullback potentially into the next rise. And then depending on how long that takes to play out, there may be more consolidation and then a next push into 40K, or there may be another pullback similar to this, then the next push into 40K right before the meeting announcement. That's going to give us our 3 rises before a midweek reversal. So that's what I would be careful of on Bitcoin. When it comes to altcoins, it follows the same pattern. So unless the altcoin is backed by fundamental news that is causing it to do something different to Bitcoin, it's the same story. So you would be able to identify something like this similarly on any altcoin that you're interested in right now. See if you can find the W formation, see if you can find this pullback, then watch to see where the Asian session contains price today, if it happens, or if we do another slow trend like we did here throughout the Asian session. Take the slow trend over the heart attack volatility. That is my advice for today. That is my play of the day. I hope you enjoyed this video. I hope it taught you something new. If it did, don't forget, like, subscribe, bell notification, leave me a comment. Have an amazing day. And don't forget, I really want to know why you're trading the volatility over the slow trend. Love you guys. See you tomorrow.